Ever feel like the market is like speaking some kind of secret language that you just can't understand?
Yeah.
Well, today's deep dive uh, might actually have the translation that you've been looking for.
Okay.
We're diving into this world of market algorithms with this trader who calls himself ICT. He claims to have like cracked the code,
Wow.
not with insider information or anything like that, but by understanding these algorithms. He says they actually drive how the market moves.
Interesting.
And our source for this deep dive is this YouTube video that we found on his channel. It's called The Inner Circle Trader.
Okay.
So, have you heard about this whole algorithm thing?
Yeah, algorithms, those silent puppet masters of the market, or at least that's what some people are saying these days.
Right.
It's a captivating idea, isn't it? Like
Yeah.
the thought that somewhere out there's these lines of code just like dictating the price of whatever stocks you're watching.
Yeah, and ICT is like really, really leaning into this idea. Like he throws some serious shade at traditional technical analysis. Like he's calling indicators like Bollinger Bands practically useless.
Yeah.
His argument is that they're all based on past price data, which he says is irrelevant in a market that's dominated by these algorithms that are just focused on like right here, right now.
Okay.
Instead of these old indicators, ICT puts all its chips on what he calls liquidity, basically just how many buyers and sellers are available at any given time.
Makes sense.
He argues that algorithms are designed to exploit these liquidity pools, creating those head-scratching price swings we all see.
So it sounds like he's saying that he's not only figured out that algorithms are doing this, but that he's also figured out how to predict their next move.
Right, and he does this by focusing on something he calls fair value gaps.
Fair value gaps.
Yeah, these are like tiny price imbalances that he claims appear on these really, really short time frames. Like he used the 2-minute chart of the S&P 500 futures, which actually tracks the value of the index, not just the price, which I thought was interesting.
Okay.
He says these gaps are like footprints, revealing where algorithms are like stepping in and pushing the market around.
Interesting. I think it would be helpful for the listener if we could kind of paint a picture of what this actually looks like. So imagine like a candlestick chart where each bar is showing 2 minutes of trading. A fair value gap, the way ICT is talking about it, would be a tiny gap in the price between those candles. It's that little blip where there's a sudden imbalance of buyers and sellers.
Got it. Okay, so it's not just some random thing he came up with. In the video, ICT actually walks through like a whole trading example where he finds one of these gaps and then uses it to predict this price drop. It's actually pretty convincing, especially if you're new to this whole concept.
I mean, it's definitely tempting to look at a single example and think you found the answer.
Right.
But as always, you've got to keep a healthy dose of skepticism.
Of course, of course.
Yeah.
So how do we like separate the hype from reality?
Yeah.
What is it about these fair value gaps that's so special to ICT? What makes them so important?
He seems to think they're like the key to this whole thing. Like, if you can find these gaps, you've unlocked the algorithm's playbook.
Yeah.
You know, it's funny. He talks about these algorithms like they're this shadowy force controlling everything.
Right.
But isn't this whole algorithmic trading thing pretty mainstream now? Like, don't most big investors use them anyway?
Oh, absolutely. Yeah.
Yeah.
I mean, think about high frequency trading.
Yeah.
That relies on algorithms like crazy, right?
Right.
Those are algorithms executing trades in fractions of a second, taking advantage of those tiny price differences, those fair value gaps that ICT is always talking about.
Okay.
But what ICT is suggesting here is that these algorithms aren't just reacting to the market data.
He's saying they're actually manipulating it. He thinks they create these gaps on purpose, like they're using them as bait to trigger predictable behavior from other traders.
So it's like they're playing chess with the market and we're the pawns.
Yeah, that's the narrative he's pushing. He even uses the term order flow. It's like,
Order flow.
yeah, it's how he describes the way these algorithms are anticipating and exploiting the buying and selling activity of everyone else.
Okay, so let's say we go with this idea for a minute. How do we figure out this order flow? Does he give us any clues?
Well, he does give us some hints. Remember how much he talks about those specific times of day, like 8:30 a.m. and 9:30 a.m. Eastern?
Yeah.
He says those are the times when the algorithms are super active. He thinks they're maybe like front-running big orders or just taking advantage of the volatility around all the news that gets released around then.
So it's not enough to just like see the fair value gaps.
Right.
You have to get the context too.
Exactly. He's saying we need to read between the lines, see the market from the algorithm's point of view. It's like understanding what they want, their tactics, their weaknesses.
And that's where this whole rebalancing concept comes in.
Right. He's saying these algorithms, they know the market likes to go back to certain prices.
Okay.
So he's basically saying, look, I can hear the market's heartbeat.
Okay, but even if this is all true, isn't it still a huge gamble? Like, you're telling me we can predict a market just by staring at a 2-minute chart and looking for these gaps?
Well, I don't think he'd say it's simple. He really emphasizes that this takes time, dedication, like a willingness to completely rethink how the market works.
I guess that's what his inner circle group is all about, right? Where he shares all those big secrets.
Yeah, but even though he hints at this exclusive group, this advanced knowledge, he doesn't give us any specifics in this video.
Which, of course, just makes it more intriguing.
Oh, yeah. Classic marketing tactic.
Yeah.
And we need to be aware of that as we're listening to him.
For sure. So how do we cut through all the noise? What do we need to look out for when somebody claims they've figured it all out? I guess it comes down to this. Can you actually predict the market
Yeah.
using ICT's methods, or any method, really?
Right. That's the million-dollar question. I don't know if there's an easy answer to that. But there are definitely some red flags you should look out for.
Okay.
Like anytime anyone says they've got a guaranteed system for beating the market,
Yeah.
big warning sign.
Yeah.
There are no guarantees in trading.
He does kind of back off a little when he talks about how, even he has losing trades. It's almost like he's admitting that, okay, even with his secret knowledge, it's still a gamble.
Right, exactly. And that's important for everyone to remember. Trading, even with algorithms,
Yeah.
even if you understand these fair value gaps, whatever system you're using, it always has risk.
So no free lunch then.
Nope.
More like
Yeah.
he's giving you some tools that might give you a little bit of an edge, but only if you actually know how to use them.
Exactly. And that's where the real work comes in. Because it's not enough to just memorize a few patterns or just blindly follow someone else's system. You really have to understand the why behind it all. Like, why are these algorithms behaving this way? What's actually happening in the market?
So it's less about seeing into the future and more about understanding the present.
Right. Being able to read the market, understand the signals that are hidden in plain sight. And that takes time and dedication and always being willing to keep learning.
Yeah.
Which brings us back to this fair value gap theory.
Right. So even if this isn't some kind of magic formula, is there anything about it that just doesn't add up?
Well, it's tricky because the way he describes it, his terms, that's all kind of unique to him. But those underlying concepts like liquidity, order flow, mean reversion, that's all real stuff.
So he's not inventing something totally new. He's just kind of like putting his own spin on things.
Yeah, exactly. And that's not necessarily bad. Trading is all about finding something that works for you, your personality, how much risk you can handle. So if this fair value gap thing, if it makes sense to you, maybe it's worth looking into.
Right. Carefully. Right.
Always carefully.
Okay.
And never just take his word for it. Or mine, really.
Yeah.
Test it out yourself, see if it holds up.
So where does this leave us? What's the takeaway from all of this whole algorithm deep dive?
I think the most important thing is just to think critically about everything, The market is this big, complex thing. It's always changing. There are always going to be people saying they've got it all figured out. But the real key is to understand it for yourself, ask questions, and never stop learning.
Couldn't have said it better myself. And on that note, we'll leave our listeners with plenty to think about. Until next time, happy trading, everyone.